Can you explain how capital gains tax is calculated? Is capital gains tax on all of my gains, or is it just a portion of it?
Capital gains is kind of difficult.
Yeah.
It's a bit convoluted. It got changed and changed, and so it's kind of dealt with all of these issues as far as
Yeah.
that goes. So we do have some visuals. This is a question that came, and we were able to do some work on it. So let me share that here. I'll put it in the kind of the big screen so everybody can see it a little bit better. And so this is how capital gains are calculated, right? And this comes from Kitsis, and he's a really bright guy. I've seen him at a conference recently too. So let's say in this case, this person has $60,000 worth of income, and they're using the standard deductions. Personal and standard deduction comes out to $24,400, right? That's up for a couple.
Yep.
But yep. So let's say this is a couple, and so their net income, taxable income, is $35,600. You can see that. So then if you look below, it says there's $3,884 of taxes owed. There's a light blue box, which represents kind of the 10% ordinary income bracket, and a darker blue box on that piece that says there's 12% ordinary bracket, right?
Yep.
So that's, so it's combined together. You get this, the first part of your income there is at 10%, next part's at 12. So now this couple has also $60,000 worth of capital gains, right? And you can see that the tax on that is $2,528. But if you look at the other axis here, there's two colors. There's gray, where you've got zero capital gain zone, and then this, I guess we'll call it pink, where it starts off at 15, and there's a 20% above that too. But and so what they're doing here is kind of figuring out how much of that capital gain is at zero. And so if you look closely there, that 35,600, that line goes across. And so you've already used up part of that zero bracket for capital gain. Right? Well, you can tell the gray part still goes up because it's this is an older number. Right now it's around 89,000, but it's still a good slide. But so up until that pink line where the 15% gain, that portion of the capital gain was not taxable, which is nice, right? And so then the rest is at 15%. It's very reasonable. Capital gains are really incredible, actually.
Yeah, and most of the time we think of capital gains as a fix for all your capital gains, but it's usually a marginal one. But like because the 15% bracket is so big while the zero is so small, most people just end up with 15% for most of their capital gains.
So when you're talking about marginal bracket versus a fixed bracket, marginal just means you kind of combine. Some of it's taxed at zero, some of it's at 15 if you have enough money, some of it might be at 20, you know. And we'll look at those brackets in a minute. And so then you kind of get this number. And so when they calculate marginal bracket, they would take that $2,500 right there and divide it into the 60,000. And so the marginal bracket for this particular tax situation, that's less than 5%. It's less than 2.5%.
It's quite small.
Yeah. Well, it's less than 5%. So now you can see just in that last kind of stacking everything up, they have ordinary income at 10%, some ordinary income, at 12%. And their total tax is $6,000. Total taxable income after deductions is $95,600. So, if you're really interested in this, you can kind of freeze this and study this chart, and you look closely at it and understand how it's a really good chart. Yeah. I mean, I think it's great. And then we've also got the bracket here. I know for me, when I'm watching something and I'm very interested, I'm trying to figure it out, I'll often pause and go and look. And so you can also see the sources here. You can go look up and read about it and what have you also. But so this is the bracket. So, you're single, you're married, filing joint, or head of household. There's three brackets, 0, 15, and 20. Again, it does matter, as you see from that last slide, what your other incomes are for that year as to where you'll end up and whatnot. And so if you look, though, like the people in a 20% bracket that are married, for example, $553,000 and above, right? We've got some clients making that at their job, but not many. Most of the times that happens from a house sale.
Yeah.
Right, especially in this area. Single is still very high, 492 and change, right? Still pretty good. So most of the times you're going to kind of be, in that kind of zero, most of our clients are out of that zero because their ordinary income pushes them out of that.
Yeah.
They've got more than 89,000.
Social Security and RMDs kind of pushing you
Yeah,
out. Usually.
exactly. So a lot of 15% is a pretty good guess if you have to guess what you're going to pay. Because even if you sell a house and make $1 million, there's a lot of it still taxed at 15% potentially.
Yeah.
And so you're not going to pay 20. It's not a flat rate. It like he said, it's a marginal rate, which is they combine. The first part's at 15, the next part's at 20, and these are the brackets. So
yeah, and for your short term, we're only looking at long term.
Yes.
But for short term, it's usually the same as your marginal ordinary income rate.
Yeah, it's just added up with your ordinary income. This is long-term capital gain, which just means you've owned it for more than a year.
Yeah.
Right. And so that's a good add-on there. And so there's a whole host of things you can talk about: capturing losses and storing those losses and using them for forward years. And there's a lot of stuff that we do in the capital gain area. If we have something that's down, even if we like it, we'll often sell it to capture that gain in a taxable account.
And
anyway.
then wait 30 days to repurchase.
Yeah, and then we'll buy something else that's somewhat similar that we happen to like also. I mean, we have a big list of things. So you got to be careful with an individual stock doing that, because that company that you just sold, even for 30 days, could go nuts. I mean, look at Nvidia. And a lot of people probably had losses on Nvidia at one point in time because it lost last year. But when they reported earnings last quarter, they're very late. They're really at the end of the earnings season. I think, what did they jump, 30-40% in a few days,
much, yeah.
right? So, you wouldn't want to sell that. So you do have to be careful with that. Most of the times we're dealing with an ETF, and we can buy something else that's kind of similar. You can't buy exactly the same thing. You have to wait 30 days for that. And then lastly, there is a calculator. I know this is kind of small to see, but we really wanted to just show this as a resource. There is NerdWallet has a calculator, and you can go in and say, okay, in this case, person had $75,000 worth of income and a $600,000 gain. So let's say they sold a house, and after everything's said and done, they end up with a $600,000 gain. So their total income is $675,000. And the main thing we wanted to point out here is you can see how much is taxed at zero, right? In this case, it was $14,250.
Yep.
Of that gain was zero. How much was taxed at 15%? Well, $464,000 of that, most of it. And then there's still another $121,000 and change that got taxed at 20%. And that total tax came out to $93,920, right? So just kind of showing you how those kind of brackets work, how a marginal tax is kind of figured out and what have you. But I think this is a great resource on trying to figure out these capital gains.
You can see the benefit of capital gains because your ordinary income is always taxed at those lower brackets, and then it's capital gains tax.
Right. Yeah, exactly. And so that's, this is a very, very nice system, actually.
Yeah.
I mean, it really is. It is one of the reasons why the stock market and the real estate market should continue to do somewhat well is because there's a tax advantage to owning those assets. And so I know a lot of people don't like to pay taxes and what have you, but boy, this is a very good system that's in place right now. And capital gains not too long ago was just ordinary income, period. Didn't have a special bracket. Now, the special bracket means that we have to put out a video like this so you can understand what the heck it is.
Yeah.
It's a lot more complicated.
And this doesn't cover your net investment income tax.
No. We too many eyes are glazing over already, so we'll call it a day. But that's exactly right. So I think this is a really good system. Don't be afraid to take capital gains tax. It can go up again. They can make it ordinary income again. There's different things, and so it might not be a terrible time to be taking tax at this point in time if you feel like you need to. All right, so that's good.